Hey, puppy trades! Oh, we'll get into bats in another video. Oh my. You guys unlocked it though. And really, a big part of it, really, did I really mess up that? A big part of it was that I was taking a pretty big position in this. I was taking a pretty big position in this. And then Microsoft lied to me about what the slide would look like. So that's a little unfortunate. Yes, but I had the Super Smash Bros. Up, the new foe that appeared. The new foe. Because I've been talking about the apocalypse for a little bit, and the apocalypse didn't happen so far. I mean, we might have started World War III, but so far the apocalypse hasn't happened, right? But I knew that even if an investor, we always got backup plans, right? We always have a backup plan. So I knew, there we go. I knew that even if the apocalypse didn't happen, I could bring about the Quant Apocalypse, or the Quant Apocalypse is what I called it. I could show them because I made a video about how the speculative side of the market was really for wealthy people going to become secondary in this new age. Everyone was going to have to become a quant. And that's why I was in such a big advantage when Yield Max came out, Pro Shares, all of these new funds, BlackRock, JP Morgan, they started this arms race that I've covered, that I've referred to. It's literally an arms race. They're competing to see who can get the most premium for the lowest expense ratio to their clients in the safest way because they have to now. So I was on top of this arms race and I saw where it was going. That eventually, when FIAT and CRSH dropped, there were going to be ways to get delta neutral or delta biased. So now, if I want to invest in Coinbase, what I do is I go 3 parts CONY, 2 parts FIAT. I've got dividends coming from a short Coinbase position, and I'm going to keep getting them. Potentially, I can write one of these positions off as a loss uh, for tax purposes. But I live in a state without income tax, so or state income tax. So anyway, the mystery position. What's this all been about? I'm going to collect massive, massive, massive dividends. And I believe that I'm going to do it risk free. You see, the dividends that I collect from CONY and FIAT, 3 parts CONY and 2 parts FIAT, they're really hedged, right? But the perfect 50-50 delta neutral position isn't perfect with CONY and fiat. Just putting those together doesn't make money. A bias has to be picked. And then once a bias is picked, if the bias is correct, it makes money with a massive, massive dividend, as we saw 135% dividend yield declared. And that's no stranger for MSTY. What I believe is happening with this position, which is 25% a leveraged short Bitcoin position, SBIT, and it is 75% MSTY, which is the yield max Microstrategy out of the money synthetic covered call position. So we're going to go over the back testing, why I've been taking this position. We're going to go over the position I'm in itself. I'm going to tell you my averages and all that. So what's going on here? I'm going to collect massive dividends from MSTY, and I believe I'm going to collect those dividends without any risk, at all. And I believe I'm going to prove that to you, or I'm just gonna do it, and then I'll show you that I did it just for fun, just because that's the entertainment aspect of this video. I do zany things, like try to get massive dividends from MSTY, and I risk free. You know, even just being in MSTY, I was an early adopter of this fund within 2 or 3 months of it coming out. I was averaging into this fund blindly, very excitingly. This is a huge winner of mine, and I'm going to get a massive dividend declared to me in a couple days. And this position is up 10% today, which is really awesome. It's all working very well. So what is the mystery position? It's 75% MSTY and it's 25% SBIT. The back tested results are from 4.3 to 11.7. SBIT turned 80K into 43K, and MSTY turned 80K into 125,129. So, what would happen if I put 50% SBIT and 50% MSTY together? Let's assume, and we're going to prove this, but let's assume that MicroStrategy is acting almost perfectly as a Bitcoin derivative, because 40% of MicroStrategy's market cap is the Bitcoin that it owns. So it's highly correlated with Bitcoin. And so we're going to prove that as well in this video. So the idea is that 80K in MicroStrategy MSTY and 80K in a leveraged short Bitcoin position SBIT is actually a net short position. Why? Well, because if MicroStrategy is tracking Bitcoin 1-for-1, SBIT is inversing Bitcoin 2-for-1. So the SBIT position has more exposure than MSTY. It's net short. Okay? So why is that significant? Well, because from 4.3 to 11.7, we all know Bitcoin has rallied significantly. So how did this net short position turn 160K into 168,000, 129? Let's repeat that. This position was net short Bitcoin. It was net short Bitcoin, and it made money. That's not supposed to be possible. And so this is the Quant Apocalypse. All right, the apocalypse hasn't happened yet, but the Quant Apocalypse will. The end of speculative trading, the death of an option salesman, if you will, because this all can be done through ETFs now. From 4.3 to 11.7, 160K turned into $168,000. It made money in 151 business days for a total annualized return of 8.92%. So that was with a position 50% SBIT and 50% MSTY that is net short Bitcoin, and that's not even including the fact that MSTY is selling out of the money synthetic covered calls, which is actually going to lower the delta of that Bitcoin position. So that's a net short position, and it made money while Bitcoin went up. Holy cow, it looks like there's an edge here. Because what happens if it's not a net short position? What happens if it's a neutral position? What happens if it's 0.25 MS? Sorry. What happens if it's 0.25 SBIT? What happens if it's 0.25 SBIT and 0.75 MSTY? What happens if it's a delta neutral position to the total annualized return? Well, something amazing happens. First, why is it delta neutral? Because 50%, 75% MSTY is just tracking Bitcoin 1-for-1. What this does is it takes the power of SBIT's leverage, and it's saying that a 25% position in SBIT is actually a 50% position in net short Bitcoin. So the idea is that there's an edge here. 75% MSTY and 25% SBIT, because of SBIT's leverage, is a delta neutral position. And even if it isn't, if I see that Bitcoin is crashing, I can just start making it 50% SBIT and 50% MSTY, and all of a sudden, I'm running the other way. But I'll tell you right now, I've already got a pretty good position just doing this for the past week or so. I'm already starting to get a good bit of SBIT in my portfolio. I'm not worried about Bitcoin crashing at all, and I'm about to get a massive dividend from MSTY declared to me. So what's the math say? This can't be right, puppy trades. There's no way someone could take a delta neutral position in MSTY, 75% MSTY, 25% SBIT, and make money. Well, that's exactly what happened. 100K turned into $135,914 in 151 business days for a 67% total annualized return. What's the crazy thing about this? These two ETFs paired together aren't supposed to move at all, and they don't move at all. One of them's holding lots of Bitcoin, one of them is shorting Bitcoin. It's not supposed to be possible to take these delta neutral positions like this unless people understand the power of options and the power of leverage. Two things that these funds do extremely well. We're going to get into that as well. The correlation of these funds, they move in the opposite direction 96% of the time. MSTY is moving in the complete opposite direction of SBIT, and that's based on MSTY's underlying microstrategy. So, my position, overview of my position. I have a winning pre-existing position in MSTY. I began taking this position in that account too. So account A, MSTY average is 31.35 with half position almost already paid for itself. The half of the position is already paid for itself. The SBIT average is 13.98 with 50 minutes to close today, 11:18. The MSTY position is 6.38 times SBIT in account A. So this is because when I was buying MSTY before, I was pairing it with CONY and fiat, which I covered in my first retirement blog. And so that was used to accumulate MSTY. I was pairing it with CONY and fiat. Now, those correlations between Coinbase and MicroStrategy aren't nearly as perfect as the correlation of Bitcoin and MicroStrategy. So that's why this is a lot better, in my opinion. So I still have 6.38 times SBIT in account B. I started doing this more recently where I'm just kind of focusing on MSTY and SBIT. So in that position, MSTY is 5.41 times 5.41 times bigger than SBIT. So looking at account B, the position is much more reflecting what the presentation is about. The SBIT average is 14.08. MSTY's average, I'm already ahead in this, is 32.38. And the MSTY position is 5.41 times bigger than SBIT. So, like I said, about 25% SBIT, about 75% MSTY. It's not perfect right now because I have a pre-existing position in one, and then the other MSTY is already running off faster than SBIT is going down. So the back tested results equal weight 160K turned into 168,129 in 151 business days for a total annualized return of 8.92%. Half SBIT, half MSTY made money. I went over half SBIT. What's half SBIT, half MSTY? That's a net short position. This is a leveraged Bitcoin short position, and this is just selling out of the money covered calls on MicroStrategy with no leverage at all. So this is clearly the stronger delta. This is a net short position when they're 50-50 paired together. Bitcoin went up, the short was wrong, and it still made an 8.92% annualized return. So what happens when they're equal weight? That's kind of what this is showing. That was the big short. How did the big short miss and make money? All right, so what's really cool about this ETF is it's one of the only ETFs I can find. It's one of the only ETFs I can find that say very explicitly in the that says very explicitly in the information in the prospectus that it can be held for more than one trading day. So many of these funds, almost every leverage fund, will not say this right here. While the fund has a daily investment objective, you may hold fund shares for longer than one day if you believe it is consistent with your goals and risk tolerance for any holding period other than a day. Your return may be higher or lower than the daily target. These differences may be significant. Smaller index gains, losses, and higher index volatility contribute to returns worse than the daily target. Larger index gains, losses, and lower index volatility contribute to returns better than the daily target. The more extreme these factors are, the more they occur together, and the longer your holding period, while these factors apply, the more your return will tend to deviate. So, but that's very cool right there that it's saying you can hold this for longer than one day, and it's going to have the risk of regular leverage positions. We look at SBIT right now. How is it getting this exposure? What it's doing? It's going into the swap market. We can see they've got swaps from Nomura, swaps from Goldman for IBIT, and swaps from Barclays. So they're using the swap market and they're using leverage to get negative 2x the return of Bitcoin. So that's something that I could definitely monitor every day if I wanted to. These IBIT swaps. Let's get back to the presentation. Speaking of Backed, I'm in Backed, and Backed's going well. Oh my gosh. Yay for me, like London Tipton. So we look at this, 50-50 together. The Big Short made money, and that's pretty crazy. It also collected 154% dividends from the MSTY bucket. So what happens when they were equal weight? 100K turns into 135K, 914, in 151 business days for a 67% annualized return. What I did is I took, again, 25% of the position size of MSTY. I plugged it into the calculators for the blind average test for the periodic investments from 4.3 to 11.7. What this does is it keeps the investment size for SBIT and MSTY the same. Like I said, equal weight. So this is what happens if the position for SBIT is lowered to 0.25. So it's delta neutral because SBIT is leveraged. So that means it's getting that 50-50 exposure, whereas this is more. It's important to understand, in my opinion, this is much more of a short position when it's 50-50. So when it's not 50-50, when it's 0.25, it's 0.75. I'm taking advantage of leverage from SBIT, option selling and alpha from MSTY, and I'm also taking advantage of their correlation to, in my opinion, collect returns and get good total annualized return. A 67% total annualized return was too big for me to pass up in a position that's hedged, a position that's really thoroughly hedged, in my opinion. Correlation analysis, a 0.96 correlation between MSTR and SBIT. They move in the opposite direction 96% of the time. 0.25 SBIT and 0.75 MSTY uses the power of leverage to collect MSTY's dividends in a neutral position. This is the correlation of Microstrategy and SBIT for the past 3 months, a 0.96, negative 0.96 correlation coefficient. They're moving in the opposite direction. It's a hedge position, but I'm collecting these massive dividends and getting positive total annualized returns.